If you haven't registered, if you would please, we appreciate that. It just helps us know who was here. But if you've already registered with us before, we've got you. We know who you are. Um, we're going to talk about commercial lending. This is Barr. He's from NEXA, as I am, and we're going to talk to you if you're an investor or you're an agent, a commercial agent, a real estate commercial agent, or a residential agent. We're going to have a conversation. Or if you just want to learn about real estate in general, you're in the right spot. Barr is a mortgage loan originator. He's experienced in residential, commercial, and international, which is interesting. Lending, owning portfolio of his own, business consultant and coach, and a businessman who happens to lend money. And he says, what you focus on, you will become. Yeah. And if we haven't met, I'm Brenda, and I did 20 years public service teaching as 4th and 5th grade teacher. And now I'm a mortgage loan originator. I have my own rental portfolio that I manage on the daily. And I'm in a partnership with Cindy. I don't know how I got so lucky. This is my partner, Cindy. She's amazing. You should have a conversation with her before you leave. Very knowledgeable in the lending space. In what capacity, Cindy?
I was an underwriter for a long time and a credit manager at a major bank for about 5 years.
Commercial lending?
Yes.
Commercial lending. So there's your underwriter for commercial lending. If you want to have a conversation about that while you're here. And if you're interested in mortgage notes, I can teach you about that through Note School. I can get you in touch with Eddie Speed, who can teach you about being a note investor. And that's that. So here are some of the things that we're going to go over, and I'm going to ask Barr to speak, and probably Cindy. And do you want to add anything else about yourself, Barr?
Oh my gosh, we don't have enough time. I learned what I do the hard way. I'm actually a businessman and I happen to lend money. So all of the principles on how I operate, what I do, it's all based upon that experience and seeing how people react when you say and do different things. Like all my business is through networking. I don't social media. I don't do print advertising. I sponsor events. I go to events. And now I've kind of graduated that into helping other loan officers. Right now at NEXA, we have roughly 3,000 loan officers, and we're on a huge growth spurt. So that speaks to the broker platform. But the other reason why I like NEXA is it allows us as brokers to do whatever we want. And I've always had a desire to do investor type loans, which reached into commercial, and I have some great connections, and that just kind of naturally grew. And now that I'm in an environment with 3,000 residential loan officers who don't know how to do commercial, when you meet them, they say, what do you do? And I said, well, I do this, 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 and I do commercial. They're like, oh, how do you do that? So that's kind of matured into what I do today, where I've stopped originating almost completely, and I support loan officers like Brenda to help expand their commercial world. So this is probably the 4th trip that I've done to a city and either done a presentation or go to a networking event to help promote their businesses. So, and the reason why I do that is commercial is for the residential world, it's kind of like an unknown, hidden wealth of activity and money. So when you're going from residential into commercial, there's a couple of different steps. There's like small commercial, 200, 400, 500,000. And then when you really start getting into it, peeling back the onion, you can see that there are larger and larger deals out there all the time. And especially in the development space. That's why I mentioned development, because I'm going to talk about that as well. The other thing about me is I just generally like people and I like to help. So I come with a servant type attitude. It's based upon my Christian upbringing, and it's served me well. If you take care of others, they'll take care of you. So everything I do is from that perspective.
All right. So ask questions while you're here and share your experiences. If there's something that chime in. Just let's learn from each other. We like to have a discussion. We want to hear your thoughts. Feel free. We want to have a conversation. And do you have any questions to start about biggest challenges or something on your mind today that you want us to hit on? Or you got a deal that's niggling, you don't know what to do about it? Feel free to speak up and ask a question.
When I'm doing the presentation, I'll bring up small examples. And if it spurs the question, I'm 100% okay to interrupt me.
Mm-hmm. Okay. What is commercial lending, Barr, and how is that different from residential, which you touched on already?
I did. Okay, so residential lending. Most of us here in the group know a lot about that. We've got people that are new up to many years that deal in the residential world. On the residential world, there are a lot of protections that are out there. Of course, we've heard the CFPB, RESPA, and stuff like that, where you have all the disclosures, right? And the residential world, if you really peel back the onion, it's 1 to 4 doors. That's what they regulate, right? And they figure that the average person that comes in to buy that is not necessarily educated in the finances and the rules behind it, how it's all put together. That spurred the formation of the CFPB. Now, you will have some lenders that specialize in that single family 1 to 4 that will branch out to 5 to 8 or 5 to 10. But beyond that, there's very few residential lenders that go above that. There are a few out there, but I don't know that I would really recommend some of them. But once you hit 5 doors and up, that is commercial. Okay. The other thing is commercial is any other type of business transaction, purchase, sale, refinance, etc. It could be equipment loans, which you stated that you've underwritten in the past. Like some of our LOs right now, we're doing a cruise ship. We've done jets, and this is just equipment loans. Then there's a bridge builder that builds all over the world. We're doing a cash out refi on some of his equipment there. So there are other things that are out there that are commercial. A business startup loan that doesn't involve real estate. Jump in.
Well, one of my last deals at the bank was a salmon delicing platform. It's just in the ocean somewhere.
Okay.
So yeah, that was for
Salmon delousing.
delicing. They take the salmon out and because they have it's hard.
Yeah.
Say it hard. So they have the salmon when they stay in the nets or the cages, so to speak, in the water. They get things on them and they have to be.
So it's basically a parasite, and someone had a business where they were able to go into these fish farms and take off the parasites off the fish. Okay.
Suck them up onto the platform and then clean them, whatever the process was, and then put it back in.
Yeah.
So.
Yeah. So it's anything that commercial is virtually anything that's not residential. Anything. Okay. Also, in the world of commercial lending, we can lend against things of value. Like if someone has Bitcoin, I've got 5,000 Bitcoin and I need to borrow $1 million against it. We can do that. Okay. It doesn't have to be something tangible like a piece of property, right? It does have to have value, and we have to have some way to secure it so that we can get the loan done. Okay. So there are various means of that. The other thing about commercial is it can be international. Okay. Right now we're doing a cash out refi of a ski resort in South Korea. It's a $125 million cash out. We are funding a startup healthcare company in Ecuador. One of our guys is flying down in 2 weeks to spend a week down there to go through part of the initial startup process. So there are many things out there that are commercial that you may not think of. So, and in our world as brokers, since we work on a platform that allows us to do anything, we find the need, we find the source of money, and we can put them together. And as brokers, we make a living doing that. So there's a wide variety. So no matter what you find out there, bring it in and say, hey, I had this crazy idea, or I saw something that someone else had done, and bring it to Brenda and ask her. Okay?
Never a dull moment.
Yeah.
So investors, developers, business owners use commercial loans?
A wide variety of people do. The other thing too, since the bulk of you here are in that single family market, as an investor, the single family market is tough. How many offers and not one accepted to do a flip? 16. Okay, so have you ever looked at small commercial? A laundromat? Okay, I'm just saying there are other options out there except for the single family. And we see a lot of our investors that are heavy into single family or the multifamily 10 to 30 kind of units that they're trying to branch outside of just the housing area. So that's something else that you might want to keep your eye out for. But some of these are really good cash flow. I mentioned laundromat. Laundromat. Thank you. It's been a long day.
Laundromats, car washes.
Yeah. So a lot of these cash flow very well. Okay. So again, just to kind of broaden your horizon. So one of those pops up on your radar, take a few minutes and investigate it. Talk to whoever's looking at it or bringing it up for you. So those opportunities are out there as well. And remember, in any type of income stream, whenever you can diversify, let's say that you have a small portfolio of 5 or 6 single-family homes, and instead of buying another one, what if you at least research another small commercial like that? So basically, anybody can use it. So
Okay.
build
Building
a
a team.
team. Okay, as an investor, this is super, super important. Okay, if you think about it, how many professionals do you have to touch in order to get a deal done? Well, we know you have to have a realtor, right? Most cases, unless you find a deal. Okay, but then you still may want a realtor to either give you some advice or to help you write up the deal. Important team member, because they have that specialty knowledge. A lender. Okay, a lender is extremely important because if you ain't got the dough, you're not going to do the deal, right? And I field, and I'm sure you've expressed to me that you field as well. I field a lot of phone calls that are just from people that I interact with or I've done deals for in the past. Because I regularly tell them, look, if you find a deal, call me. I'll give you 5 minutes on the phone. And if it makes sense, well, I'll tell you. If it doesn't make sense, I'll say, I don't think so. This is why. So I spend at least a fifth of my week on the phone talking to people that deals that just never even come in the door. But it's building that trust, sharing my knowledge with them that allows me to continue to build that. Title companies, inspectors, home repair, like wouldn't if you walked in and saw a big crack in the basement, you'd definitely want to say, BJ, I need you, dude. Right? Absolutely. Okay, I'm on my way. That's part of that team that you can pick up the phone and get an answer or get help very, very quickly. You've done business with them, you know them, you trust them. Okay. So when, like, as a realtor, somebody comes to you, you go, hey, I got a team. You don't have to use them, but it would be great if you did because I know and trust them. And you bringing me in to help guide you through the process. Right. It's the same thing if we get a deal as well.
Yeah. So in residential space, people typically go to the realtor first. So they might approach any of these realtors and then they come to the lender. So, which is really backwards. They should come to the lender first for a pre-approval letter and then go to the realtor. But that doesn't really happen usually. So how do you do that in commercial space? Do you get a pre-approval letter? If Michelle wants to buy a commercial, does she get pre-approved and go shop for that? Or does she shop first and then come with the letter?
That's a long answer. The short of it is that you need to take some time to figure out if you're lendable. How many times have an underwriter where we get a file and you're like, not enough liquidity here, right? I mean, the number one thing that we see as far as reasons why loans fail, well, one of the top 3, I guess, is that they don't have enough financial oomph in order to get it done. Because not only do you have to have enough for the down payment, many times they're going to see liquidity and reserves. Okay. So there's a lot of different factors that will come into that. So, did I answer your question?
Yeah.
Okay.
Yeah. Then there was key players in commercial lending. We talked about us, the broker, and of course the big bank. Why would they come to us before going to the bank?
Okay, banks have money. We like money. The problem with most banks, and not all, and some credit unions, is they lend in a box. If your loan falls in that box, we're on. If it doesn't fall in that box, sorry, I can't help you. What do you do? Right? Well, there are many other lenders that are outside that box that can fulfill that, whether it's a private money lender, whether it's a lender that takes a different approach to the market. There are many other ways of doing that. So, like in a broker platform, you remember what I said earlier? If we find a need and we find a source of money, we can put them together. Our primary lender that we use will write any commercial loan. I said any commercial loan, cannabis, international, companies that have failures. We can figure out a way to do it. Like we've got a one that we're looking at right now. It's a Class A hotel in Mexico that's $225 million in debt. And we're trying to figure out how to engineer to put that thing together. So there are other creative entities out there in the lending space that will lend outside what that bank does in that small box. I actually have an employee of mine that actually calls banks and bank loan officers to say, hey, if you have it, what do you do with your bank turndowns? So we have a whole program on how we help get that funded and then return the customer back to the bank. Very, very effective. So.
And then you could find private investors like Next Level Strategies. I've heard of that little company that Cindy and I run. If you could approach in a smaller fish, I guess you would say, to get your deals funded, or private money lenders, and then SBA. Do you know anything about that, Barr? SBA?
I know a little bit about both. How's that? I tell people I know just enough to be dangerous. So, but let's just touch back on private money lenders. Private money lenders, if they like the deal, no matter what it is, they'll fund it. Crazy kind of stuff. I've got a private money lender that is my last resort whenever we have a deal down in Florida. He only lends in Florida, but he charges 6 points just for him. So the broker has to charge on top of that, and his rates are not pretty. So again, when it comes to private money lending, it's whatever you can convince the lender to take on that they'll take on. So, but then the other aspect of it, and I'm sure you can expand on this. The other aspect from your private money lending is you're helping them set up so that they can be their individual lenders, right?
What do you mean?
Well, for your business, the next level, you're teaching them how to lend money.
We are bringing Cindy. You can speak to that. I will speak, but I want to hear from you too today. So,
as part of what we do at Next Level Strategy, we teach people every month with a class, and we teach different aspects of real estate investing, whether it be private money lending, mortgage notes, how to use your IRA to fund your investments. And so we do teach and consult on that, the people, and then we also we are offering private money lending services now, and taking a different approach to that, and bringing some co-lenders along with us, so that investors in the community can kind of co-fund each other's deals.
And we're putting our capital in the deals as well, and we're doing all the work. We're vetting the buyer, we're vetting the deal, bringing the paperwork all together, and our money lenders are passive. So we're helping people that say to us, well, I don't have enough money to get in the real estate, or I don't have enough to get started. We help them get started with small balance. So we've got a lady coming in on a deal with, was it 8,000 next week? Yeah, she wouldn't start with that. It was like, come on, we'll get you started. So we do that for people in the community. It's almost like a farm to table thing that we do, but it's lending in your own community.
Okay, so wrap your head around this. So you walk into Wells Fargo. Hey, I want a commercial loan. Can't do it. Now, you know that there are options out there. Just because you get a no just means that you have to go ask somebody else. Right. You know, I used to coach and consult for a lot of sales teams, and one of the things that I always tell them is, if you get a no, either you're asking the wrong question or you're asking the wrong person. And in this case, you're asking the wrong person. So there are other avenues out there. SBA is the government's version of, for single family, it's the government's version of an FHA loan applied to a business. Okay. They'll actually go in and guarantee part of whatever you're borrowing, so that the bank could do the loan for you. Most cases, not all. Now, the underwriter can correct me if I'm wrong, but my experience is most cases it's generally more expensive, it's more paperwork, and it takes more time. But when applied to the correct avenue, the different loans that are within that program are very helpful, especially for small businesses or businesses that want to expand.
Maybe there's some strings attached on the back end of that.
There definitely can be.
Yeah.
Yep. And in some cases, the qualifying criteria is very restrictive.
And then back to, how many points did you say that last end of the line lender?
Private money lender?
Yeah, the end of the line.
Starts at 6 points.
So I had a conversation with somebody here in this room today that won't be named, that we were talking about interest rate and points. It was like, why would you pay that interest rate, or that? Why would you pay that? But if you're making millions of dollars and you got the deal done, you know, it gets the deal done. Okay. You're still making money, right?
Okay, so yes. All right, so the lender wants to make money. Either he's going to put it into the rate, or you're going to pay him points. Which one do you want? Okay.
There's that too.
Yeah. So,
but as an investor, it's okay to pay if you're getting the deal done and you're making money. I think if you're making money, getting it done.
Yeah. Well, and that's another thing. You know, we just went through a spike of interest rates here recently, right? When we're now a little bit more on the backside of that, but we still regularly had commercial deals that were getting done. The reason is that they looked at how much revenues I can produce, and no matter what the interest rate is, if it makes sense, I'm going to do the deal. I had one guy tell me, I don't care what the interest rate is. I'm going to make so much money on this deal. I just need it done. So we got the deal done, and he's loving it. He still has that loan.
All right. So mortgage brokers, we already talked about that. So banks and credit unions. We didn't mention credit unions. Do they do commercial?
Yeah. Okay, so we all understand what a big institutional bank is. Credit unions are small individual consortiums, what we'll call them, where they're either typically city or state or region that are formed and set up their own basic rules of how that they want to lend within lending guidelines, of course. But they can set their own interest rates. They can set their own programs. And they're typically designed to compete against banks, right? So sometimes they'll offer different incentives, like on savings account, we'll offer you 2%, where we know the banks are offering you 0.5%. It's up to them to set a lot of their own programs. So, and generally the underwriting there, my experience through the deals that we've sent to most of those is they're usually a little bit more flexible, and it's a little bit more personal service, we'll kind of say.
Okay. We talked about private money and hard money, SBA. A little bit about the process, because I get hit with these questions sometimes. What do you do? Like, how does this work? So you got to call your broker or your lender. They got to schedule a call. You got to talk about your deal. Barr, you were telling me about this today, how you were coaxing out of somebody the details of the deal. You got to get the details of the deal to the broker, your lender,
Right.
so they can figure out how can they help you. So you've got to lay it all out there, and it'd be great if you did it on the first call and not 5 or 6 calls in. Like, you're going to get better help. Just lay it all out. What do you need at the beginning? Then you got your application and list of documents, which can be overwhelming. And then I get a lot of, why do I need to turn all that in? It's just needed so the underwriter, like somebody like Cindy, can evaluate the deal and decide what additional documentation might be needed. You kind of go back and forth with the underwriter. They might need something else. Get the documents together. Maybe we need a little something else. Don't argue with them. It's just a waste of time. Just turn it back in. If you can get your hands on it at all, if it's possible, just turn it in and close the deal. Get it scheduled and funded. Does that sound right? All right.
That's that just hits close to home, because I had so many conversations when I was in banking with the sales partners. I would send a list of items that I needed to for the deal to move forward, and they would answer like 3 of the questions.
And then you have to set it back again and again.
And I'm like, I'm telling you that these things need to be answered, and you can answer them on the front end or you can answer them on the back middle. But deal's not going forward until we get these. Some things are definitely, going to stop the deal. Some things are nice to have.
Here's the best piece of advice I can give you on when you're interacting with an underwriter. Just get it done. Don't argue. Don't kick back. Don't do anything. Because every time you delay that process, this is what happens in the underwriter's office. He doesn't want to give me that document. I guess I'll find out when he wants to give it to me later. And he goes on the back pile. He picks up the next file and he's off and running. He's completely stopped work on your file until you either give it to him or you go away. Or they say, hey, this has been here 30 days. Rejection. So do you want to get the deal done? Just give them what they asked for. I mean, I've been doing so many of these things, and I'm involved in, like right now, our company, I think we have 138 active commercial loans right now. And I can't tell you, I would say at least 20 of those are pushed back on, like, well, what about the paperwork? I'm like, so then I have to call the borrower and explain to them that exact same thing in much more detail. And the number one thing that you can do is just be compliant with whatever they ask. If they say, hey, I need you to retype this because it's not on the correct form, okay. Get her down to center end. Just move on.
Yeah.
It's to your benefit. Mm-hmm. And one other thing, too. The more information that you can provide, the better and quicker they can underwrite.
The faster you
get
your deal.
underwriter?
The faster you get money.
Yep.
Yeah. Because remember, behind your file, there's probably 10, 15, or 20 more that underwriter has to get to. Last thing you want them to do is set your file down. I'll get to it later. Because all of a sudden, then somebody's got to raise a stink. You got to get the documents anyway, and then move on. And I don't mean to harp on it. It just, I try and impede the information into these people. I plead with them, get the information to the underwriter. So when I do my discovery call, when I wrap up a call, I said, this is how the loan's going to go. And that's one of the things I talk about is paperwork.
Mm-hmm.
So.
Yeah, and it is overwhelming, and especially if you're busy being a real estate investor. Any real estate investors in here ever had messy books?
Or no books?
Or no books?
Oh, it happens.
Well, when you're doing all the things that get it done every day, you can't also be sitting in the office getting it done behind the scenes too. So sometimes it can pile up and be quite the mess. So my advice to real estate investors is get your bookkeeper hired first, as soon as you can. And I understand you can't right away because I've been there and done that. But as soon as you can, get that bookkeeper hired and get those books straight out the gate. And it just makes everything easier when you go to get funding.
I'm going to backtrack a little bit because you touched a little bit about credit unions. I got a cabin listed in Cosby, and somebody's going through a credit union. They want to use it as an Airbnb, but it'd be better for them to have it rate-wise, but it'd be better for them to be commercial versus going through a residential owner in their credit union.
Maybe. Okay, so here's the thing about rates when you go on one way or the other. The single family lenders specialize in single family. A commercial lender is going to underwrite that as a full commercial deal. You're going to have a lot more paperwork in general, depending on who the underwriter is and what programs they're trying to do. But you're going to have a lot more flexibility in how that gets done. Like for example, a DSCR. Everyone know what a DSCR loan is? If not, tell me and I'll explain it. A DSCR loan is a debt service coverage ratio loan. And that's a loan that's specifically for the 1 to 4 door single family that is low doc. And it focuses on the revenue that's generated from the property and not you. It uses your credit score, and you have to show the ability to do the down payment and some reserves. And after that, everything else is on the property. It's a cool loan, and Brenda can go more into that if you want to give her a call. But as far as pricing, that is a very, very competitive market for DSCR lenders. I think at NEXA we have 62 DSCR lenders.
A lot.
So she's able to go and shop that. Versus if you come to a commercial lender, I may only have one program that's going to fit that, or two that I can do, and then whatever that rate ends up being, that's what the rate's going to be. So if it was me and I was going after a single family DSCR, I would shop a broker versus shopping commercial. That would be me. But it's a much more competitive market when you look at rates and cost and paperwork and everything else. But there's a special loan called the DSCR loan that Brenda can help you with. And
then you could compare. I mean, why not? It's a free country, right? So, get quotes from 2 different ones if they want. Is it for rentals?
It's an investor product. You cannot buy it, DSCR, move it.
You can't live in it. It's not residential.
Can you use the VN0 to buy NEXA?
To do what?
For a flip? No, you wouldn't want to do that.
No.
Probably a fix and flip loan, or hard money loan, or private money.
Yeah, and I'll just because I know it, I'll say it. But on the fix and flip, remember that's a short-term loan, acquisition, renovation, based upon both loan to cost and ARV. Okay, and those are short-term loans that are specifically designed for that function. Because if you try doing a long-term one, like a DSCR loan, which is a 30-year product, the inspector will get there and go, it doesn't have doors or windows, and the roof needs to be replaced, and it's just not lendable. So that's why that other product's in there.
And they have prepayment penalties a lot of times to get the best rates. So you wouldn't want that. You wouldn't want the prepayment penalty on the back end of it.
Yeah, most DSCRs come with a prepayment 0 to 5.
But they're great if you want to do the fix and flip and you got the house ready, but you decide instead of flipping, I want to hold this. Then load it with the tenant and do a DSCR loan to cash out and get your underlying debt paid off on it, and then get a nice 30-year structured loan. And then you can start cash flowing your property. That answer your question?
I've got a bonus piece of information. I'll come to you in just one second. Here's a bonus piece of information. Remember I told you that it's a competitive market from the DSCR loan? Well, we've recently added a couple of lenders that will let you do a cash out without seasoning. In other words, you don't have to wait 6 months to own it before you do a cash out on the refi.
That's true, but the rate's a little higher.
Well,
I'd
it's
check that
available.
daily. It's available.
Yes.
You get a better rate if you wait 6 months to do the DSCR, but it can be done almost immediately. You can go in and fix it up pretty quick and then cash out.
Yep.
Or finance it.
Cash out refi.
And that actually is exactly what
Okay.
got my line. So
Awesome.
Yeah, or I mean, you may want to use I don't recommend it, but I mean, you could use your own capital to buy a property that needs to be fixed up, get it nice and ready to go, load it with a tenant, DSCR out of it, pay yourself back, plus more, depending on how much it appraises for, because you can get 80% of the appraisal back in your pocket.
Right.
Yes.
Does anybody have to buy these on correct?
The what?
She's asking, she has a 10 unit, so she's asking about a DSCR on a 10
Oh,
unit.
okay. There, that kind of DSCR does not exist in the commercial world. Okay, not in its exact form the way it is for single family. It's still a full blown commercial loan, but the way that DSCR works is that's one of the factors that they look at in order to qualify for different pricing or actually different loans as well. But it's not the only thing that they look at. Versus in the single family world, that's the major underwriting criteria.
And she's got to take care of that 10 unit in a little bit. So then there's SBA, traditional, commercial, bridge loans. Is that a thing?
Okay, a bridge loan is short-term money to solve an immediate issue until long-term financing is available. Okay. Yes, but in more in the commercial world, it's like an example. I was on a call today where the gentleman he and his partners have $150 million portfolio. One of the businesses that they want to acquire, it's going to take about $5 million to, well, I don't know. It's going to take $1 to $2 million probably to do down payments to lock the businesses down. Okay, and he needs it like in a week, like $1 to $5 million in a week. Then he wants to fund the purchase of it, but according to however the contract's written, he's got an immediate need to get that funds in there to make the deposit. He doesn't have cash available, so he needs that loan to bridge him 90, 120 days while we do the other refis for him. To finish the purchase loan for him.
Like the gap funding that they talk about. What's the collateral going to be for that bridge loan?
It's going to be a $25 million hotel that's almost fully paid for.
That'll do it.
That'll do it.
Got to have the collateral for that.
Yes.
So.
Yeah, and plus he's got other money in the bank that we can. It's all where the underwriter likes it.
Do what? Then he's like, that's not a problem.
No.
Yeah.
No.
Seems like he has his own bridge money. Maybe
he does, but he's not the only one in charge of it. So, but he can immediately access the hotel money because he owns the hotel. So that's why he's called us up and said, I need this in like a week or 10 days. So.
And what about construction loans? We're working on one of those right now. A local builder building 6 at a time, funding that.
Yeah. Okay. There's development type loans, and then there's actual construction loans. Construction loans could be, we're building a hotel. We're building a group of homes in a subdivision. Actually, one of the calls I had last week was, and we haven't quite gotten to see how we can do it or if we can do it, but it's a builder in Panama, the country of Panama, that is trying to build 10 homes at a time in a subdivision that he did. So he's looking for funding just for the what we call the vertical, which is basically when we start pouring the foundation and up. So
we can get into that if we like. And then lines of credit, is that a thing?
Ooh, lines of credit in commercial lately are tough to do. Very tough to do. And you could probably speak to this. Underwriting for most commercial loans since we hit COVID has really gotten a lot tighter. So LTVs have dropped. Let's see, what's the other thing? LTVs have dropped. Some of the reserves have gone up. It's just harder and harder to get a loan done now versus it was a few years ago. And with a line of credit, it's basically, here's money, you can go out and spend it on whatever you want. there's usually no tracking of what it's spent on in most cases. So in order to qualify for that kind of freedom to take money and go out and do what you want, the criteria to get approved for that is tougher. Or a lot of times we'll see them come in and ask for a $5 million line of credit and they'll walk out with one. So again, it goes all more to that tougher underwriting criteria.
There's a lot more monitoring on it too, because a lot of times they're secured by accounts receivable or inventory, and that will have, depending on the financial stability of the business, that be monitored that monthly or quarterly, and they also make the lines of credit just where they can cut them off. I can't.
Call it due. Call that baby due. You better bring that money in here.
Well,
I want my money back now.
Yeah. Well, and correct me if I'm wrong, if they don't perform to whatever that underwriting criteria is, they can stop the money flow. You still owe the money, you're still paying interest on it, but you can't get more even though that you thought you had more because you didn't perform to the level that you'd agreed to.
Interesting. Okay, how realtors and investors benefit from commercial lending. Can we talk about referral fees? Because I had asked Dave earlier if you can do that, referral fees. Have you seen that happen?
Yeah, generally in residential, I imagine in commercial should not done as much in commercial. That generally speaking, if somebody refers you somebody from another city where somebody they want you to take care of, it's generally a fee negotiable, but let's say 25%. Take that money.
Okay, so if I'm a residential realtor and somebody comes to me with commercial needs, but I refer it to you, would you give me a referral fee?
Yeah, be a licensure.
If I were, I can't be the LO. I shouldn't use myself as an example. Michelle let's use her. And she is residential, but she refers to you commercial deal. Can you give her a, yeah.
Okay, so I'm going to interject here. If you're a residential realtor, you just heard that you can take a referral from commercial, send it over to somebody else who's going to do all the work, and you're going to make whatever you can negotiate, say 25%. Second income stream with no effort and a phone call. I better call every single commercial realtor I know and be friends with him and ask him what's hot lately. If I find something, can you help me out a little bit?
Yeah.
Absolutely, right?
Yeah, we don't compete in commercial. Something new comes on the market. I mean, 90% of it, they don't want it on the market. It's all off-market deals. That's the best stuff that's out there. Once it hits the market, nobody wants it.
Is that right? I didn't realize that.
Okay, but the other thing too is if you have a friend that lives in Seattle, hey, I'm just talking to my neighbor and he's talking about, he wants to buy a car dealership. Oh, okay, you know what? I have somebody that can help him with that. Second income. I mean, we'll just make a couple of phone calls. I mean, in today's economy, how tough it is to find and get a listing or find and get a buyer and get the deal all the way done. All the time and effort that you put into that. Well, if you put a little time and effort into asking about commercial, that's one of the things that I work with our loan officers on is just start talking about commercial. They go, well, how do I do a social media post? How about this? How about that? I'm like, just start talking about it. It's literally that simple. Okay.
I have a question on referral fees. How do you police that? I mean, it occurs. There's spams.
Well, yeah. Okay. So that is in the residential and world as far as the realtor.
So, Michelle, you would say to your client, I'm residential, but I know somebody that can help you. So, and then you turn around to say, Dave, I got this referral, but I need you to sign this piece of paper first. And after you sign this piece of paper, I will introduce you to my client.
Because even if we have it in text message, up the creek, goodness, I have that from them son. And the broker's on it too.
Okay.
Yeah, the brokers had to sign. I just did one.
Okay. This is on me.
This will usually give good referrals to residential.
So if the commercial deals are not on the MLS, or if they are, like you said, they're just sort of leftovers on the MLS, how does somebody find a commercial deal that they may want to invest in?
It just pops up. But that's what's hard for being a commercial agent is that you have to network with other agents.
Back to Barr's point.
So they're pocket listing.
But I mean,
Okay, so So here's something that people generally don't talk about because it's not PC. Commercial deals are most likely, and I'm just using the term, they're more like the good old boy society. It's who you know. And whenever you're interacting with who you know, it's networking. You establish those relationships and stuff like that. And if you are lucky enough to find somebody that's like, hey, I'm thinking about, that's a pocket listing, right? That's a hot item that you're going to get an immediate callback on, right? Immediate callback. And again, I'm not trying to sugarcoat anything here, but like how I build my business was by building relationships. Like last year, I sponsored an investor event up in Vancouver, Washington. 225 investors showed up. I was the main sponsor, did a couple of panels, had my staff there, and I'm still doing dealings out of there for investors. So, it's by going out and building those relationships that you really get the business done. And commercial is extremely important. Extremely important.
Small businesses, they can't, or the for sale sidewalk. It would destroy the rep. Dealing with that house. There's so much stuff out there. You drive by that's for sale, you'll never know. And that's why with the commercial, you got to go business to business and see what they need. Well, it's a lot of work.
Okay, there's more commercial going on around you than you will ever know.
Yeah, so how do we know?
It's by talking about it.
Back to
But
networking. So
what here's a quote that I love. What you focus on, you will become. Right? Okay? I want to focus on playing guitar. One of my lifelong passions that I still haven't done because I haven't focused on it, right? But someday when I magically decide that I have time to actually do fun things, I'll find time to do that. It's the same thing with network. It's the same thing about talking about commercial. It's the same thing about residential real estate. If you focus on it, you will become that.
So if you were a realtor in here and you wanted to focus on commercial, would you just recommend going to networking events?
Okay. How do you spread the word about how you're in residential right now? You talk to people.
Where are you meeting people that you've got some investors working with you, Chris? Where do you meet them?
Businesses, small businesses, large businesses. You go to let them know you're there to help them. Because like I was saying before, you walk into a business, if it's packed to the ceiling, I like a fight shop because it's just constantly overcrowded every time you go in. Mm-hmm. But you just find ways to help them and helping them network.
Yeah. So, and David, right? How long have you been a realtor? Okay. How many people do you think you've met in your career through real estate?
We look at your phone.
Okay. Can you imagine if during that 25-year period of time you said, hey, I'm a realtor. By the way, I can also help you with commercial. How much farther along do you think your business would be today?
Yeah, it's always about, that you're selling yourself and you're networking and you're putting people together. Yeah. The deals work themselves out.
Right. Yeah. But if 25 years ago you'd also added commercial, which is what I'm telling you all should do today, in 25 years, how much, during that time period, if you'd added commercial, how much farther along do you think your business would be today? If you talk about it all along. Well, that's what I'm telling you today. Yes, I've had that conversation. Yeah. But again, what I'm talking about is just start talking about it, and then take time to come to things like this. First of all, I applaud each and every one of you for taking time out of your busy schedules to come in here to do one thing, to improve yourself. Congratulations.
To focus on it.
The best thing that you can always do is invest in yourself, and that's what you're doing here tonight.
And you joined a club to to network. You could do other things. Yeah, you could do other clubs and.
Yep. Well, joining a club is a fancy way of saying I'm networking at a specific location every week or every month.
Town hall meetings. I'm a veteran, so got to know you're a veteran to be in the do. Whenever you don't have to help out the veteran. Yeah. Always.
Yeah. Yeah. Well, see, like me, I don't originate anymore, but I'm still going to sponsor events. I've got deals where I'm pulling in other LOs and just giving them the deal. So I benefit in other ways, but that is a big part of what I do now. Yep.
Okay. Talk about commercial and opportunities will find you.
Wow. It's like I knew what was coming next, right?
commercial loan structure. Can we talk about that a little bit? I know we talked about.
Oh, yeah, I'm getting somebody in on this one.
We've covered DSCR, but what about this loan to value? That LTC, the loan to cost. I get a lot of questions about that.
Okay, like on a fix and flip, which can be done both residential and commercial. You can do that as well in commercial, or fix and hold, whatever the case may be. So let's say that you buy a property and the property's $300,000, and you're going to put another $100,000 into it. That is your cost, right? And then your ARV after repair value, let's say it's $700,000. So if they do a loan on loan to cost, and many times, like on a fix and flip, they'll have a double check. We're going to do 80% loan to cost, or we're going to do like 60, 65, 70% loan to value. Whichever is the lower of the two is the number that you're going to get for your loan amount. Okay?
Questions about that loan to cost?
Okay. Let's say that you buy a property for $300,000 and you put another $100,000 into it. Your cost basis to acquire that all the way through to completion is $400,000. Your ARV after repair value, in this case, let's say it's $700,000. So when you do a fix and flip in the traditional model, right, for the single family, and it does bleed over to commercial as well, is they'll have two criteria on what the loan amount is going to be. They'll do a certain percentage on loan to cost, and then they'll cross-check that with a loan to value in ARV. Whichever is the lower of the two will be your loan amount.
So they may do 80% loan to cost. So they'll do 80% of that $400,000. That means you're going to have to bring 20% to the table.
Plus closing costs, plus broker fees, plus all that other fun stuff.
Got it. I want to do
that. We love y'all, but we still want to get paid, right?
Yeah, everybody's got to be here and get paid. What about the interest rate, fixed versus variable in commercial?
How does that fit into your business model? Are you able to ride the market up and down in the hopes that you're going to save money in the long term? Or is it better that, hey, I know that payment's going to be $6,500 every month? So that's one of the things that you have to make an educated decision on. Your lender will, if you ask to have both presented, you can. The other thing too, and many times, is most of these commercial loans will come with a prepayment penalty. Mm-hmm. Does everyone understand what that is? Quiet. So I'll assume yes. You can also negotiate that as well. Like I present a lot of term sheets, which is an offer to lend, and on there will be what the loan is. Like it's 30-year fixed. Is it a 10-year with 10-year amortization on 30, or other things like that, or is it a variable? Okay, so you are always welcome to, at least with our lenders, you're always welcome to come back and say, hey, can we try something like this? And when you do that prepayment penalty, typically they're 0 to 5 years. I've seen them longer. I've seen them 0 to 10, depending on how risky it is. But you can always negotiate that back down. Like, hey, I don't want a 5-year, I want a 3-year. Well, your rate's probably going to go up, or the points are probably going to go up to get that same loan done.
Yeah, that's part of why you don't want to use that DSCR for your fix and flips, because you got to pay that prepayment penalty. There are DSCR that'll do no prepayment penalty. They're higher rate. You can talk about that. But DSCR is debt service coverage ratio. In your case, is just like if you want to hold a long-term rental, for 30 years. So banks versus brokers, who to work with. So we've hit this, so we can hit it a little bit more. Talk about the loan approval speed, loan options, investor friendly. Is there anything on there we haven't already discussed, Barr? Faster closings.
No, maybe. No, I actually think I've covered them all.
Okay. Do we have a realtor referral success story in the room? No?
I guess you need a record of success.
Yeah. We're all success stories where we sit, but I didn't know if there was a realtor success story where you'd have a referral come to you for commercial. Well, I think on both sides of the table, that would be nice. If you're the residential realtor and you're referring to your commercial realtor, you're going to get paid on the referral. Got to get that document signed, like she said. But also it works for the commercial realtor because the deals come to them and maybe you don't have to advertise for them so much. So do you advertise for commercial? Do you say, like, in advertisements, I'm a commercial realtor?
Yeah, and OM, do that. That's a lot of work.
I was actually thinking about starting a brokerage too, just because the developments. It's 160 units just with phase one. Too busy. So just sit there all day.
Mm-hmm.
So
Yeah.
you pay less, but
That's a good point that you bring up there, Chris. When we talked about this, it takes longer to close these commercial loans. So,
Oh, yeah.
I assume as for you, as the realtors, it's longer to close a deal. So you might go, with residential, you might have 3 or 4 or 5 or 10 lined up in the pipeline, first time home buyers, right? But commercial, it might be one really big deal, but it might take how many months
or years.
or years?
Well,
So,
and if you think about the cycle that he has to go through, he's got to find the loan, right? Or find a loan. Listen, he's got to find the deal. Then he's got to figure out how to market the deal, or talk with his within his circle, and then they have to find a buyer, right? Then you have to work on the terms, and then it gets turned over to us, and then that's a whole nother. That could be 30 days to 2 years before we can close some of the larger, more complicated deals.
mhm.
Find the building. It's a whole other night.
So if you're the commercial realtor during that time, you just got to have another income source coming from somewhere, I guess.
Or just have a lot of activity. But the good thing about commercial, most of them, not all of them, some of those are large. So with large revenue comes large paychecks.
If you saw it, right, you're working with your business owners. They need to they need to be, their leases are ending. There's all sorts of opportunities just to yourself afloat. But it only takes one deal and you're fine.
Like I mentioned, the deal in cash finance. I can't even talk. Cash finance.
Try to get
Cash out finance of a ski resort in South Korea. The borrowers already agreed to a 1% broker fee. That's a nice paycheck. So
on the big number.
big number, 1.2.
Do we have any investors in here that have done a commercial deal that are on the investor side? And we have Vanessa. She bought a 10 unit, so that's a success story. It's commercial, but you've got it. She's bought it. Anybody else commercial bought something commercial, Dave? No, I have a daycare. I don't know if that counts, but that's a sort of accidental commercial purchase there. I guess I didn't accidentally sign those papers when I bought it, but I ended up with a daycare.
Did I really sign my name to that?
Yeah, how did that happen? That happens to me. Like, I don't know how did I end up here?
So it's like I woke up in Vegas and I was married.
I don't know what happened. So, the daycare is good. I have a daycare attendant. I learned a lot about, and this will hit home for you, Chris, about zoning on that daycare. So I didn't understand what I didn't understand when I first started out, and I bought this daycare building. And owner finance, there's a lot of owner finance opportunity in commercial space too, if you'll ask. And then my tenant was Head Start. Do you guys know Head Start? They're the federal government. They're child care from the federal government funded. They moved out. So I wanted to sell the property commercially because it's a commercial building. If you look at it, it's clearly a daycare like commercial building, but I can't because it's zoned residential and the zoning. They won't change the zoning. They will not change the zoning, even though right beside my place is commercial and on the other side is commercial. But for some reason, they won't change that particular one to commercial. So I couldn't sell it as commercial. So I'm like, well, what can I do with this property? It's vacant. It's clearly not a single family and can't put a family in here. And so I whined and begged and cried around and found another daycare. I was so grateful, and they're doing really well in there. We needed that, but that was a lesson for me. And you had that happen on a deal with zoning. So we worked on that, yeah. So it's important to, look at the zoning when you're doing commercial deals, because if you buy something that's commercially ran on might have a commercial business is happening there, but then when you go to buy it, you realize, oh, that's illegal. Like, that's not supposed to be happening. That's residential. I didn't know it was a thing.
So I'm gonna throw in a couple of things here. So, how many people actually order a title report before they make an offer? Zoning will be in there, right? That is important for you to know. And if it's not in there or you don't understand what's in there, call the city, call the county.
Landowner too.
Pardon?
It's something about the landowner too.
Yeah. So super important. If you're dipping your toe or poking your nose into something that you're not an expert in or comfortable in, make the phone call. Make the phone call. That's why you build a team, so that you don't have to know everything. Okay? So I'm smart enough that I can pick up the phone, right? And I can call Brenda or I can call Chris. Make those phone calls. Okay? Especially when it's your money, it's super important, but it's even more important if you're trying to bring people into a deal. Okay? Again, build that team.
What do we got going on here, Barr? What's this?
Oh, okay. So here's a deal that actually this was one of my first 5 commercial deals. Still didn't really understand what I was doing, but I got a referral from a residential realtor down in the LA market of one of his clients that his family wanted to buy an avocado farm. And guess what? It happened to be right on the San Andreas Fault. I was like, oh boy, I don't know if we can do that. That's kind of crazy stuff. So anyway, the biggest thing that I learned about this was how we can pull in multiple entities from within the family that all operated kind of separately, and we're able to come together and figure out how to do that loan. Some of the things that I thought were really kind of cool, and again, this was early in my time of being a lender in the world of commercial, was one of the key factors. This was a farm, an active farm, and the seller was completely leaving the business. So in an active farm, you have to maintain the trees in order to bear fruit, right? So one of the things that was kind of a question mark, and it took a while to negotiate it, was that part of the deal was that they got the manager of the farm, not the owner, but the manager, at a high amount of money to stay on for 1 year. Because up until that point, they had nobody to run it, and the underwriter was not going to approve it because they didn't have some way to keep the farm running. So there's these little things that happen in the background that, until you're actually focused on it and you hear the underwriting and you're involved in those conversations, that you don't know all the complexities that go into making a deal work. So that's one, as I reflect back, that I really kind of opened my eyes to pay more attention to some of the details and how the deals are built versus me. I'm a hunter. I love to go out and find deals. Love to go find deals. But then once I find it, I'm like, okay, I'm bored with that. Let's go find another one. Well, obviously you don't get paid until that one gets closed. So it forced me to go back and look at all that kind of detail. And as an investor, you are neck deep in that type of detail. So as you do more and more of these commercial deals, you're going to learn more and more things that you need to check on. Like we just talked about zoning. Hugely important. Okay. So the more as an investor and the more as a professional that you're part of the team that brings that expertise, the more that you're going to have to learn and get more into the differences that are greatly different from residential versus on the commercial.
I heard you say something about partnerships. So that brings to mind a young lady that's super smart, detail-oriented, hardworking, got a nice down payment, but she wanted to build vertical. She wanted to do some affordable housing construction. And but she didn't, on paper, she didn't have enough. She wasn't I won't say bankable. She didn't have enough. How did you word it? She didn't have enough money behind her, I guess.
Reserves, liquidity.
Yes, but she partnered. So you mentioned that with the avocado farm, they partnered.
Yeah.
Partnerships are a thing in commercial.
Yeah. So and again, it goes back a little bit more to the underwriting too, is that like we have multiple joint ventures or partnerships that we look at where they have one guy that's got money and he usually has credit, but sometimes he doesn't always have credit. That each one of these people can bring different items to it. And sometimes there's so much money that's going to be required. Not a single person has enough money in order to make the deal work, for down payment, reserves, liquidity, and all that other stuff. So that's, or even experience too. So that's why we see many times when these people form these partnerships just for a specific project. They'll form an LLC and they'll have 1, 2, 3, 4, 5 members. And that's all the business that they ever do together is that one transaction.
So don't think you can't do it. Maybe you just need a partner, right? This is the last one, we promise. Private jets.
Okay, we talked about equipment loans. This is a form of equipment loan, whether it's a private jet or it's a cruise ship or it's a multi-million-dollar yacht. It doesn't have to be real estate in order to be lendable. We talked about the Bitcoin, stuff like that.
Yeah.
And this one, it was 4 private jets that were in St. Pete. I wasn't actually in part of the deal, but the lender that I use, it was a deal that was actively going on, and they brought it up in some of the meetings where I attended. So I learned a lot about it, and I'm glad I did, because some of the nuances on how they put that deal together were quite interesting. And some of the data that they requested on that was really kind of cool too. Because in a jet, obviously, you've got fuel consumption, you have maintenance, you have pilot fees, you have landing fees, all recertifications. Recertification on a private jet is very expensive. They hit a certain number of hours, and it has to go in and they actually like take apart the engines and do all this other checks on them, on hydraulics and things like that. And then they have to put it all back together, and it's recertified out to go out for another amount of hours that are out there. So there's a lot of factors that goes into how profitable is a jet, or the operating costs and things like that. So to learn all the details of exactly how that's put together is really, really fascinating. But it also kind of opens up your eyes to, it doesn't have to be real estate.
Right.
So.
Yeah. Open floor, guys. What you got, Michelle?
So, I have a question. So, construction versus development, is there a number of deals that changes from construction to development?
Okay, development is typically like, I have 500 acres, and it's just woods, trees, some birds, and some streams. Literally, there's nothing there except the wilderness. Okay, so development, you go, okay, so what are we going to do with this? Are we going to do a subdivision? Are we going to do mixed, where it's going to have an event center and a subdivision? We're going to have some retail in it and a subdivision. Are we going to put townhomes and regular homes in it? Then you have the whole, what we call the horizontal. The horizontal is from that raw ground until it's buildable. In other words, here's a lot, I want to come in and build on it. That's what we consider the horizontal. So you're grading it, you're putting in drainage, you're running power, sewer, and water to it. You're putting in streets and sidewalks. You're doing all that kind of infrastructure kind of stuff to make that lot buildable. That's what we call the horizontal. Then comes the construction. I want to build an event center, or I want to build a house, whatever you want to build. That's it's still part of a development, but it's still part of, it's still different than what you would do to actually develop. But in many times we use the term development in order to do to do the actual all the way through the horizontal and still do the construction. So they're kind of loosely interchanged there, but it's really development and the construction.
So you can use the construction loan on raw land, like one lot.
Yes.
But the investor.
If you're developing, it typically refers to, I have some type of ground that I'm going to do multiple things on, like put in streets, run power, run water, things like that.
Usually want a private lender because they can see the big picture.
That's tough. Again, the underwriting is tougher about now. So for most things.
And a commercial loan, is that kind of like the equivalent of a conventional loan on the residential side?
I'm not sure I understand your question.
So on one of the loan types, you had just basic commercial real estate loan listed. Is that, you said the SBA is kind of like FHA. Right. Is a commercial real estate loan kind of like conventional, almost like the most standard?
There's, and I didn't write the slide, so I'd have to look at it again, but I think I remember what you're referring to. You have a commercial loan, which is a general term. Then you have different types of commercial loans that are within it. Okay. And I think what you were referring to when you said traditional, it's like pretty easy. Like, hey, I want to buy a grocery store. I want to buy a laundromat. Then there are loans that are specifically around that. Like here's an example, a church loan. That's a specialty loan that not all lenders will do, but it's still a commercial loan, right? And underwriting a church is very difficult. And even though that you'll get quotes from, we had one 2 weeks ago, someone came to us and said, hey, we just had our local, I can tell I'm getting tired, credit union give us a bid on building a church. and it came back at like 9.75%. That's expensive. Well, then we ran it through our program, and I've seen a preliminary term sheet on it. I think we're going to come in about 6 or 6.25. So that's a huge difference, especially when you're talking about a nonprofit and that payment. So there are different, again, it's different types of loan that are still commercial. Because if you remember, the first thing that we said is anything that's not residential 1 to 4, any other type of loan is a commercial loan, with the exception of like a personal loan. Like, hey, I need, I want to go buy a car. That's not really a commercial loan. That's more of a consumer loan.
So the criteria for these loans can be varied.
Yes.
Yes.
So again, that's the advantage of using a broker that understands how to figure out what you're asking for and how to get a source of money in order to do that.
That's that discovery call. You got to talk about it.
I have between 7 and 14 discovery calls a day.
Yeah. And counsel your people. Don't hold anything back in the discovery call. Please, really, just tell us now. Just lay it out, because we're going to find out. So everything will go better for everybody.
Yeah, like are you being sued? The lender really, really wants to know that if there's a pending lawsuit. We had a deal that got to the closing table, and lo and behold, we found out that he's being sued. Killed the deal completely after 5 weeks of intense work.
What about loans and medical debt? How does that affect?
Student loans and medical debt? In the commercial world,
if it's asset-based,
not a big deal. I mean, if it's something that you're in trouble with because you're behind in payments that comes up on your credit report, that's a problem. But yeah, there is a personal financial statement that you're asked to fill out, so that'll appear there. If the underwriter has a question or an issue with it, you'll know. Yeah, and be honest when you guys are doing these loan applications, and be realistic with yourself. Don't does anyone not know what a pro forma is?
Tell us what that is.
A pro forma is a projection of future earnings and expenses. Simple, okay? So in a pro forma, we see a lot of these where we come in and we look at it and we're like, the business is really going to make that much money? Yeah. Well, I mean, basically, it's your prediction. And if it seems likable or reasonable, the underwriters go, okay, sounds good, check. If it doesn't seem reasonable, he's going to be like, how did you come up with this data? Now all of a sudden you have now all of a sudden, if you were painting a nice picture, you're going to have to paint more picture because you made up BS, So be honest with yourself, because the job of a commercial lender is to put you in a position to succeed. If you lie to them or hide things from them, that's only to your detriment. Because what happens if you get a year into the loan and I knew this might occur, but I didn't really account for it. I didn't tell the lender about it. And the loan that I have is making it more expensive than I can actually repay. The lender does not want that asset back. They want you to be successful, pay your bill, and then refinance again so they can make more money.
Good question.
Yes.
Do commercial loans go to up to 25-year amortization schedule?
You can get them longer.
Longer?
Oh, yeah. No, we do 30s. And on some rare occasions, I've seen things that are specialty kind of things that go even longer. But that's really, really.
Well, this is a kind of a creative lending space that we're in.
Yeah. Remember that one of our main lender will do any commercial loan of any amount. I was on a phone call 4 months ago with a gentleman that wanted to build a $10 billion theme park in Texas. And we spent 2.5 hours on the phone with him on a Saturday. Yeah. Okay. We had another one that came to, and whenever they get really, really big, and you can attest to this, the percent of them really actually crossing the finish line is so small, you'd blink at it and be gone. But it's our job to meet with the people, investigate what they're saying, and see if it's real, number one, and number two, what would it really take in order to launch that so that we can really underwrite it.
Right. And yes, we're talking about different type of businesses, but let's say a 10-unit rental property that so you can finance based on pro forma if it is just new.
Yeah, if it's new, then yes, we're going to ask for pro forma. If there's history there, we're going to ask for the history.
Okay, and then
a 10 unit, can it be more than 25 years amortization?
It could be 30. Yeah. It could be a 30 on 30. Yeah. It can be.
And like, how do they do the appraisal for the property? Is it just based on the pro forma, and then like the appraisal is basically looking for what's brand around the bottom?
Because they're not just going
Yeah. Well,
to say like,
yeah. Well, like NOI, net operating income, but there are many things that are on that appraisal, but when it comes to the underwrite, yes, they have to read through all of it, but it really is going to boil down to a couple of numbers, and NOI is one of those. So, but on a new one, remember that's all forecast. Like if you're going to build something, right? Then you typically will provide those numbers to the underwriter, and then in the appraisal, again, there's a lot of stuff that'll go through it, and it's a little bit different when we do the underwriting on a to be built, right? So
Everybody's getting
okay.
tired.
Anyway,
Did you anything else you want to say, Anicia? I feel like he didn't answer your question.
I had one more, but
Did it go out of your mind, or do you remember it?
okay.
Okay. You know how to.
Well, I'm here for 18 more minutes.
This is how you can contact me if you don't already know. Thank y'all for coming. Thank you. And thank you, BJ. Yeah. And take some pizza with you if you want, because apparently I overestimated.
Yeah.
Oh,
Yeah.
Your family some pizza. Take the boys some pizza. Take your boys. Take your boys.
Yeah. So here's my golden nugget takeaway. You remember earlier I said you guys are investing in yourself? Continue to do that. Because I'm totally serious. That's how I ended up doing what I'm doing, is because I had a desire to learn about something. And then I got good at it, and then I actually changed careers and started doing it. Now I've changed within my career. I've changed yet again because I've focused on certain things that I like to do. And like this kind of stuff, I love this stuff, where I can come up and help impart some knowledge and maybe change somebody's life, or spark a thought on you that may send you in a completely different direction. And you may never see me again. But for me, I like that kind of stuff, because other people have taken time to teach me stuff, and I ask a lot of questions anyway. But take this desire and continue to pursue it, whether it's this or something else. But in the world of commercial, remember that one slide that I pointed up out there? There are more dealings that happen around you. When you drive tomorrow during the day, I want you to think about Barr said, and look at every single lot that you go by, especially on a busy street. You have to remember every single one of those is a commercial transaction. Whether it happens now or it's going to happen in the future, that's every single one of those is going to be one. And then you multiply that by all the streets around you, by the state around you, by the country around you, then by the world around you. There's so much money that moves around every single day that you never see or never hear about. And you can be part of that. And you can be part of that. Okay? Thank you.